Welcome. In this video, ZBCN vs PEPE, which is better and can ZBCN increase by 900%? We will analyze this. Don't forget to subscribe, like, and please watch to the end to understand.
Let's first analyze ZBCN.
When examining chart patterns and technical analysis approaches, especially ascending trend lines offer investors highly valuable insights. In the current situation, we see that the price action is moving in an upward trend direction and is touching this trend line at regular intervals. This structure reflects market psychology, supply-demand balance, and investor confidence, presenting a technically healthy outlook. An ascending trend line means that each new low is higher than the previous one, indicating that buyers remain strong in the market and continue to support the upward movement. The fact that the price reacts upward after touching this trend line confirms the validity of the trend from a technical standpoint. Ascending trend lines also act as dynamic support. This means that the line functions as a level where the price finds buyers again during market pullbacks. Especially when the price approaches this trend line, investors begin to look for opportunities, and this level often becomes the starting point of a new upward wave. As this behavior repeats, the ascending trend line gains strength and becomes more reliable in the eyes of market participants. This confidence contributes to the price continuing its upward movement again and again. On the current chart being analyzed, the fact that the price continues to move after touching the ascending trend line shows that the upward movement remains healthy and sustainable. One of the most critical conditions for the continuation of this trend is that the price does not fall below the trend line and continues to respond positively at points of contact. If the price dips below this ascending trend, the technical outlook could be damaged, and this may negatively impact investor psychology. However, for now, such a risk does not seem to be present, as it is clearly observed that buyers step in every time the price touches the trend line. Price movements progressing within such a structure often indicate a healthy upward trend. Ascending trend lines serve as strong reference points for both short-term traders and medium to long-term investors. The price's upward reaction after each contact inspires confidence among investors. This environment of confidence typically results in more capital entering the market and the price moving toward new highs. Therefore, maintaining such trend structures without breakdown is critical for sustaining a technically positive outlook. In the current view, the fact that the price has reacted positively after touching the ascending trend line shows that the trend is still being respected and used as support. This indicates that market participants have strong confidence in technical levels, and also explains why such trend structures are so important in technical analysis. Because trend lines not only reflect past price action, but also play a major role in determining the possible direction of future movements. For investors, seeing price action within an ascending trend is encouraging because it shows that a bullish sentiment still prevails in the market and that selling pressure is limited. Typically, sellers dominate during downtrends, while buyers take control during uptrends. A price moving along an ascending trend line reveals that investors view each pullback as a buying opportunity, and that sell-offs are short-lived. This leads to the price gradually reaching higher levels over time. If the price continues to move along this ascending trend line, the likelihood of testing new highs in the coming periods increases. The market continues to form higher lows and higher highs, sustaining the upward trend structure. This not only technically, but also psychologically feeds optimism among investors. Especially as long as the price respects the ascending trend line, investors adopt the mentality that pullbacks are buying opportunities. This perception increases buying pressure and makes it easier for the price to move to higher levels. That said, it is quite natural for the price moving within an ascending trend to occasionally undergo short-term corrections. However, if these corrections are limited to the trend line and the price bounces back upward from there, it shows that the trend is progressing in a healthy manner. Such corrections help reset overbought indicators in the market, rebalance volume, and set the stage for the next upward movement to be stronger and more decisive. In this context, the current price action is generating very positive signals from a technical analysis standpoint. The price moving along the ascending trend line and continuing upward after touching it serves not only as a technical support level, but also as a psychological pillar that boosts investor confidence. As long as this structure remains intact, it may be technically reasonable for investors to maintain their long positions and continue with buy-side strategies. If the price continues to respect this ascending trend line and bounces upward each time it touches it, this may be a sign of stronger upward movements in the medium to long term. The continuation of the trend increases the potential for achieving higher targets. For example, the commonly quoted saying in technical analysis, "the trend is your friend," was not coined without reason. As long as the price moves in a certain trend, trading in the direction of that trend increases the probability of success. In summary, the fact that the price continues its movement after touching the ascending trend line is a very positive development from a technical analysis perspective. This shows that there is still a strong base of buyers in the market and that the trend support levels are being respected. If this structure remains unbroken and the price continues to rise without deviating from the line, it will be a positive signal not just technically, but also in terms of investor confidence. Especially if new investors start buying based on trust in these technical levels, the upward momentum of the price could increase further. Therefore, monitoring these types of ascending trend structures closely and remaining in a bullish position as long as the trend holds will be beneficial for investors. But we can't make decisions based solely on trends. Let's now look at the other metrics. Stay tuned.
In market analysis, the red line clearly drawn on the chart typically represents the asset's previously reached highest level, known as the all-time high, ATH. This ATH level is recorded as the highest price point the asset has ever achieved and is defined as a strong resistance zone in the market. This resistance acts as a critical barrier that must be broken through, and it is a reference point closely watched by both investors and algorithmic trading systems in technical analysis. The ATH level creates a psychological barrier in the market because it represents the maximum value the market has reached before. When the price approaches or surpasses this level, investors behave differently. For some, the ATH is a zone where profit-taking intensifies and selling increases. Many investors believe the price has reached its highest possible point and prefer to exit their positions. However, if this level is broken, market dynamics can completely shift, and a strong momentum for further upward movement may be triggered. If the price surpasses the ATH level represented by the red line, there are no longer any historical technical resistances ahead. This situation signifies a new chapter for the market. Since the price begins to reach levels never seen before, this fundamentally changes investor perception and behavior. The market enters a phase where the price can establish new highs and its potential becomes much broader. Technically, once the ATH level is broken, new support zones begin to form. The area that previously served as resistance transforms into a support level if the price holds above it. This allows for a smoother price action. This support limits potential downward movements and facilitates upward momentum, making the price's upward trajectory more stable. Breaking the ATH also has a significant impact on market psychology. Investor confidence and bullish expectations increase. At this stage, especially new investors tend to enter the market as market dynamics now appear more positive. This increasing demand causes the price to rise rapidly. Additionally, algorithmic trading systems often interpret the ATH breakout as a buy signal, which helps boost volume and supports further upward movement. However, the ATH breakout is not just about a technical price increase. It also signals a phase in which the market dynamics, investor psychology, and overall supply-demand balance have changed significantly. When the price reaches new highs, investors' profit expectations rise, media and social media attention increases, and a new wave of excitement is generated in the market. This wave lays the groundwork for rapid and sustained price increases. The price exceeding the ATH level, represented by the red line, is also referred to in technical analysis as a resistance breakout. This breakout occurs with strong buying pressure and is usually supported by increasing trading volume. During this process, the previous resistance zone becomes a support zone, and as long as the price does not fall below it, it can continue its upward movement. This new support allows the price to rise more steadily. Moreover, breaking the ATH reinforces the perception among investors of a bull market or new uptrend. This perception leads to new capital entering the market and accelerates buying activity. As a result, the price rises even further, reaching levels the market has never experienced before. This upward movement can sometimes be very fast and aggressive because there is no historical resistance blocking the price. It should also be noted that once the ATH is broken and the price can move freely without resistance ahead, the sustainability of the uptrend increases. Resistance levels act as obstacles that slow or reverse upward movements. The absence of such obstacles means there is nothing significantly hindering the price from climbing higher. Thus, market participants believe the price will continue to rise for an extended period, triggering further buying activity. In summary, surpassing the ATH level indicated by the red line is a very strong positive signal in technical analysis. Breaking through this critical level boosts investor confidence, increases buying demand in the market, and indicates that there are no longer any technical barriers in front of the price. Therefore, once the price passes the ATH level, it can easily reach higher levels and continue its ascent. Such movements usually signal the beginning of new bull markets and create significant opportunities for investors. For market participants, this breakout means that the path is clear for further upward movement, resistance is removed, and the price can climb freely. In conclusion, the price exceeding the ATH level, represented by the red line, is not just a technical breakout, but a fundamental shift in market dynamics. This change signals the beginning of a period when the price can continue rising without resistance, and investors eagerly target new highs. Therefore, investors should closely monitor whether the price surpasses this critical level and consider the potential upward opportunities that may arise after this significant breakout. If it makes a new ATH, we may see sudden spikes in price.
When comparing the ZBCN and PEPE cryptocurrency projects in terms of market dynamics, technical characteristics, and potential returns, each contains different elements that attract investor interest. A detailed comparison between these two assets can shed light on investment decisions by highlighting their respective strengths and weaknesses. Especially when evaluating ZBCN's potential to take over PEPE's current market position, it is possible to say that this could present highly attractive and high-yield opportunities for investors. In this context, if ZBCN were to replace PEPE, it could potentially see a 900% price increase. First, PEPE coin became quite popular in market trends, gaining massive hype through social media and community support, and stood out with rapid price increases and volatility. However, the price movements of such meme coins generally involve high risk and speculation, which makes them more likely to experience sudden surges and drops rather than long-term sustainable growth. PEPE's success largely depends on community strength and the hype factor. From a technical standpoint, price levels display high volatility, which brings both high profit and high loss risks. On the other hand, the ZBCN project is built on more solid foundations and is seen as a coin that investors can approach with more confidence due to its technical infrastructure and forward-looking roadmap. The development process of ZBCN, the team behind it, and its technological advantages are key factors supporting the project's potential growth. In addition, ZBCN keeps its community engaged by providing regular updates and innovations to strengthen its current market position. This increases investor confidence and brings expectations of long-term growth. Considering PEPE's current market cap and price levels, if ZBCN performs similarly or better, it could inevitably attract investors. This would significantly increase ZBCN's market value and price. In other words, if ZBCN takes PEPE's place, this change could create a major wave of price increase driven by investor perception and demand. In such a case, a 900% increase from ZBCN's current price level is technically possible and a logical scenario. The foundation of this potential increase lies in investors' interest in new projects and their shift from highly volatile coins like PEPE to those that promise more stable and sustainable growth. Additionally, improvements made by the team behind ZBCN, marketing strategies, and technology integrations prepare the ground for the project to gain more market share and increase in price. These developments reinforce investor confidence and help boost market volume and liquidity. From a technical analysis perspective, when examining ZBCN's chart structure, support and resistance levels, trading volume, and momentum indicators, if it rises in a way that surpasses PEPE's popularity and market cap, a 900% price increase target appears reasonable. This situation makes it possible for ZBCN to stand out in an environment where investors are seeking new opportunities and favoring projects with sustainable growth. In conclusion, this comparison between ZBCN and PEPE offers an important perspective for investors. If PEPE loses its current market position and ZBCN takes its place, a dramatic increase of around 900% in the ZBCN's price could occur. This potential should be closely monitored by investors and strategically acted upon at the right time. In this way, investors could achieve significant gains through ZBCN's rise and help create a new success story in the cryptocurrency market.
Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.